What's up, team? Sean from Vesta Live here, and today we're going to finally talk about these most recent results from Palantir. I want to talk about the recent change of price call from CITI, and I want to talk about specifically what I'm doing and what I actually just did before the market closed as well. I think there's some important things in here to consider. I think the way we think about earnings, the way we think about analyst estimates, the way we play on pricing is very important. Before I do any of that, I'm also going to talk about some of the key technologies or key pieces of this, because there's this sort of continuous conversation I'm noticing online where there's like a fundamental almost misunderstanding of how these different components and pieces come together. I just picked a few that I was going to talk about that I think can sometimes be so overly complex that they just get almost like written over and no one wants to talk about them. I get even myself on Twitter, I'll make a post about something, and then very obviously some of those comments that come through are like, well, I read a 2-second headline, but don't know anything about what the product does. So I want to talk about a few key components before I jump into this and start getting you to think about the big picture, what the TAM looks like, the way to address this in different ways. But I'm going to call out very specifically here before we start. This is a much bigger disclosure than normal because I think it is warranted for this. As always, I'm not your financial advisor, okay? This is not financial advice. I'm simply going over my thoughts, opinions, and hoping to provide some education the way that I think about investments like this. I don't know your personal financial situation. I don't know what you make, how much you spend. I don't know your family needs. Do not take advice from people you don't know. You can leverage it as a signal or an indicator and combine it with your own due diligence. What I also want to talk about quickly here is I own Palantir, both equities, both options, as well as complex derivative plays I'm making here. So there is no intention here whatsoever to get you to like or dislike this stock, buy it or sell it, or take any position in it there and too. In fact, I don't care if you do or not. This is about the company for me. This isn't about the stock price. But as with anything, I happen to like what I see here, and based on my portfolio and my ability to handle risk and mitigate that risk, it works for me. And I'll talk a little bit about that, but not a ton, because I've done videos on this already. So without further ado, I want to just actually jump in right off the bat and talk about a few key things, because I think these are really big misses that a lot of folks who are looking at the data don't quite understand what this means and why it's important to be part of the platform. So I'm going to share my screen here, which is almost always the toughest part of this, is actually figuring out what I'm sharing. So I just jumped over here to the Palantir Hyperauto page. Everything I'm going to show you is readily available to you. All this data, all this material sits right there. Now, the reason I'm starting here is the ability to integrate, act on, and join data is important for any analytics-based solution, any BI-based solution, any AI-based solution, okay? But I want you to think about this as step one. It's table stakes. If you want to be in this game, you need to have the ability to quickly and easily connect to data sources. I think that's pretty obvious for anyone who's done any research here. What makes this interesting is Hyperauto is designed in a way that's very different than most. I don't need to re-explain something that's very simple, but what you're seeing on the left-hand side, I want to call this out. This is not exciting. This is what is expected, okay? But expectations are what you need to do the job of what your product is geared towards doing, especially as we start to think about the value long-term of a company. And their own words here, which is actually a really interesting point, is their goal is to have to build automation and dynamic data pipeline generation to achieve in hours what might take a normal team months or years. So I want to talk about this for a second. Connecting data sources, understanding how they flow back to each other, the governance of those data sources, and the way they trace back in that governance process, that is a very time-consuming thing. This isn't some bullcrap, phrase that they threw on their website to get investors excited. What they're doing, and you can see it right here, is they're literally creating a common data model that can drive all the interactions and analytics and insights that are driven from it. Now, the key with Hyperauto is the goal here is to accelerate this process. This is where it starts to become kind of a big deal, right? A lot of traditional BI tools or ETL vendors, ETL is extract, transform, load. This is when you take different types of data that look and feel different. You've got some squares, you've got some triangles. We want to put them together in a unified format. This takes time. It takes someone who knows what they're doing. The reason I'm calling out Hyper specifically here is they literally put this out there for how easy you can think about this, right? If you're getting started with their Hyper product, which is how you connect to and bring that data together, you literally connect it to your existing systems. It's going to automatically build the pipeline and generate business objects at scale. This is what you then report off of. It allows you to explore enterprise data and only bring in what you want to bring in. I want to talk about that for a second as well. And then, of course, the key here is because it's out of the box, it's going to drive some acceleration. But you may not care about all that. Let me tell you what you should care about as an investor or as someone who's interested in this company. The key with not having to pull in all of the data is a big deal, because then you don't get degradation of service. You don't get long wait times while data moves from one platform to another, moving from AWS and the Palantir or from a data lake somewhere else in, right? A lot of times what we want to do as people who work in and around analytics is we want to just leverage the data we need for the project that we're working on. So we can get a snapshot of the data, a window of that data, or just bring in those specific pieces of data that we want as well, okay? The beauty, again, of Hyperauto is it's designed to automatically recognize and work with data of different types, understand how to best build it, and pull it all in. So it could be customer data, it could be geospatial data, it could be IoT data. Lots of different types of data that are built on lots of different types of views and understandings of what that data will mean. We have to be able to modernize that, bring it together, and join it all into one cohesive view. So Hyperauto is a big deal because this is sort of the key to making all this work. And I'm only scrolling through here because I want to show that these are some interesting things you should be paying attention to. Now, the other thing I want to talk about real quick here, of course, I can't get this thing out of my way now. I'm going to push this over here in a second, is I want to talk about this idea of edge, right? We're going to talk about this when I go over the numbers in a second. That's why I'm doing this. Edge is really the way that we think about how they bring sensors together in a unified way to understand what is happening with those sensors. What are they picking up on and what is it telling us? And then additionally, as we're pulling those sensors in, this sensor data is starting to help us to learn, help this model understand what these points mean, what happens when they change. How does it integrate or tell us new pieces of information about what we're working on as the owners of this technology? Now, I want to really pull this together in a cohesive vision as to think about just how big this is in a second here. On the little thing they have here, right, you can see it's clearly based on a military need. I think we have a very defined TAM from a military perspective or government perspective. Not to say that the TAM isn't huge, but we can realistically build that number and understand what it means, right? Where it gets really exciting is we start to think about, like, how does it interact in a bigger way from a predictive maintenance perspective? I want to give you a really simple example of this. Let's say you own 500 grocery stores, okay? And in front of every one of your stores to get in, you've got sliding doors. Those sliding doors don't work. People can get hurt. They can't get into the store. It could cause a fire hazard. It could cause other hazards, right? Typically, there's the two there. Usually, there's another set of two or something similar once you get in, right? Now, I want you to imagine that everywhere you walk and everywhere you go in your life today, you're surrounded by sensors. They're everywhere. They're on windows. They're on doors. They're on the food you might pick up on the shelf. They're on the bottom of a medicine bottle, right? They're everywhere. They're in your car. They're in the buildings. Think about the size of the TAM. If you could help someone figure out its scale, when their equipment is likely to fail, have it maintained ahead of time, and also prevent other issues from occurring, right? I give you a simple example like a door, but what about moisture on a roof or moisture in a basement? Or what about recognizing when customers come into a store and acting in real time? Or what about when you're doing automatic product deliveries and you can have a sensor that picks up that it's been delivered to your house, right? Start to think about sensors in terms of data as a nonstop, continuous stream that will never end, coming to you in every moment of every day. This is where we start to think about, okay, well, I can see some story in and around sensors and around that data needs to stream. But what if we can combine all of that sensor data with other types of data, right? Customer spending patterns. We look at marketing data. Are we targeting the right folks? Are we doing geospatial work to understand when someone comes into the vicinity of your store and sending them a coupon at the right time? I know these don't sound like sexy use cases, but these are big, big use cases, right? Now, of course, the military side of this is pretty obvious, right? We want to track risks, dangers. We want to track enemy movements, et cetera, sure. But I think that commercial piece is very, very big here. From that understanding what sensors will tell us, that predictive piece we just spoke about a moment ago as well. And again, all of these things are in here. They've got great videos on it, lots of cool stuff. What really, really kind of blew my mind is when I started really looking into meta constellation. I want you to imagine, just as you see in this picture, we have sensors all over Earth, right? They're tracking lots of different things. But what many people don't realize is our entire planet is literally surrounded by thousands upon thousands of satellites. In the storybooks, in the movies, we see that one random satellite up in space, and the movie kicks off by getting hit by another random satellite. The reality is they're everywhere. There are so many satellites up above us in the sky. And what if you had the ability to have them work together to ensure that they can collaborate on a key focus area from different angles, automatically based on something that was picked up by a sensor that recognized a risk, that recognized a tornado was forming, that recognized an earthquake could be happening or a tsunami, right? It's always easy to think about the government and military use cases, but the commercialization of the ability to control, understand, automate, and act on real-time sensor-based IoT edge data, oh my God. Like, you might be thinking, this guy's a dork, this stuff's not that cool. I'm telling you right now, this is what I've said before. There will be a time when you either are leveraging AI to help handle your data at scale, or you're probably out of business, okay? So the reason I'm calling all these out is they're literally putting AI into the orbit around the Earth by helping satellites talk to, understand, and optimize where they're going to be to pick up data the best possible way to action on pieces of data that are coming in. Now, the point of this video is not to talk about all of their products, but the reason I'm talking about it like this is I want you to start to really think about breaking your ideas of what analytics can do and start thinking about the way it drives things to change, right? You have to have that Hyperauto layer to bring the data together, recognize it into continuous patterns, and help to use that to create trends, predictions, and prescriptions. At a much bigger execution level, we're talking about recognizing when a door opens or closes, how often it does, and when it needs to be oiled, greased, or replaced, all the way to talking to satellites in space to converge in one specific area to ensure they have total coverage of a square mile on Earth. That is wild. And I'm only starting here because I think this is a good backdrop to getting into the earnings, talking about the numbers here. I welcome your comments if you want me to go deeper on this stuff. I actually really enjoy doing it. The biggest challenge I'm having right now is there's so many areas to focus on. So let's talk about the business, because we know the stock is getting hammered, but I want to call out that the entire market is also getting hammered. We know that Cathie Wood is selling all over Palantir. Hey, good for her. We don't know why she's doing it. Who cares? Don't invest in ARK if you don't agree with it, right? It's no big deal. So let's jump in. I don't want to spend too much time on this and put anybody to sleep, but in a nutshell, we're looking at the full year 21 business update, okay? As always, I'm going over their deck. I'm not affiliated, associated with, paid for, or work with this company in any way. I just happen to enjoy this space. I love financial markets, and I also love data and AI, so it's a natural fit for me to talk about it. As always, everything they're putting in this report is on the safe harbor slide. It could be future-looking statements. You should make zero investment decisions should ever be made based on things that have not happened yet, okay? So just keep that in mind as we go through. Here's the full, the Q4 results, right? Total revenue, 34%, government revenue up 26, commercial revenue, 47, U.S. commercial revenue growth of 132%, adjusted operating income was $124 million, which is a 29% margin, which is pretty damn great. Adjusted free cash flow of $104 million, again, 24% margin there, and 80% GAAP gross margin. So quick assessment here, right? What are we seeing? We're seeing overall revenue growth in double digits. We're seeing continued government revenue growth. We're seeing great commercial revenue growth. And going into this call, what I was looking for was continued accelerated commercial revenue growth. I was looking for them to add more commercial customers in larger contracts. So let's see what happened with that once we start working through this. And keep in mind too, this is looking at it from a year-over-year perspective as well. Now, this is the full year results. This isn't comparing Q4 21 to Q4 20. This is comparing 2021 to 2020, right? Total rev growth of 41%, government rev growth of 47%, commercial rev of 34%. They also are calling out that the commercial customer count tripled. Okay, that checks a box for me, right? More commercial customers. We see the U.S. commercial revenue growth was 102%. Adjusted operating income is $473 million, or 31% on margin. Adjusted free cash flow is $424, 28% margin, and GAAP was around that 78%, right? So again, positive numbers, lots of growth, companies doing the right things, they're gaining customers. We know that their net revenue retention has traditionally been very strong, so I'm sure a lot of this is organic growth as well as we walk through it. What's particularly interesting here, I'm not going to waste a lot of time on some of these slides, is their focus is on investing back into their business so they can have this high growth, but also keep an eye on high cash flow. I thought this was an interesting slide and one I didn't see in the previous report, where they're essentially calling out like, look, our revenues are good, our growth is great, our adjusted cash flows are good as well. I don't think I'm going to say too much here except to say like these are good numbers, they're doing the right things, they're growing at scale, and their cash flow is actually excellent as well. One of the reasons I started with that previous talk about the different pieces of the technology is because they're doing a lot of things that are not the norm or what you probably wouldn't think about when you hear AI. It's not just a report, it's not just a dashboard, it's not just telling me what happened, right? I can't drive my car if I cover my front windshield and only have a rear view mirror. That's really important to understand here, everybody. Like, it's great to have a holistic report of what happened in the past, that rear view mirror, but it's hard for me to move forward if I can't understand that there's a red light coming or a turn that I have to make or there's a car in front of me. This is where that ability to look forward based on the data, the likelihood of something to happen, the propensity of something to happen, the ability to understand its scale, what that data is telling us. Now, again, I want to be totally clear here. I can name 20 companies off the top of my head that can do these things. What I'm looking at is Palantir as both a company, the way it's growing, moving into commercial markets, and as an investment for me, how I feel about it. It doesn't mean, by the way, that there can't be 5 huge winners in this space or 10 winners in this space. So keep that in mind. This is an assessment of Palantir on their numbers and their technology, not in comparison to their peers. That's a whole different conversation that I'm also happy to have as well. But just some interesting things that really stood out to me here was, look at the spectrum of the way people are using this technology, right? I mean, it goes from everything from like supporting building planes to fighting ISIS to money laundering to wildfire risks. I mean, it's a whole bunch of really cool use cases. The only problem is, I want to be really honest here, sometimes these really cool, unique edge use cases can make it difficult for normal commercial customers to see how it will help their business. Now, I don't think that's happening, but I do want to call that out, that most customers do not really want to see this. This is great for government. This is great for military. But a lot of things when it comes down to it is, what are my competitors using? So what I need to start seeing out of these folks is more big marquee names taking on the software, using it, embedding it, rolling it out, and then long-term seeing organic growth of that license usage as well. And again, I don't even want to talk about this. You guys can all check out the slide, but they're starting to get more of these reports that are coming out that are saying, you know, it's easy to call this an expensive product on the surface, but when you look at the actual value added, the fact that it actually works when it's embedded, this is a very desirable outcome. What they need is more of this. And it has to start coming from commercial customers. I can't stress that enough. Where in my mind, where I see this stock starting to move is when we get more commercial customers doing these kinds of reports, okay? The TAM expansion piece here was really cool. I had covered Apollo and Foundry previously because I was really excited about them, talking about the level of TAM. And this is what I was getting at a moment ago. When you think about it from the standpoint of any data source, anywhere of any type, all the way up to moving satellites to cover an area in real time, leveraging edge-based IoT data. Everything in between is how you think about this TAM. I know you can read what's on the screen. I won't read through all of it, but what I think is great here is Gotham is really focused on sort of that military, that police, that government data side of it. Foundry is really where I'm looking for commercial growth at scale, and you can see that those TAMs are growing as we move into the future here. And Apollo is the platform that does a lot of this work, the data side of it, the combining of it. You can see why that matters, right? More data than ever is being created every year. That's never going to slow down. It's only going to get more difficult, requiring more innovative solutions to pull more and more data, make sense out of it, and then deliver it in an executable format, both in an autonomous way as well as the ability for someone to interpret it themselves. This was the slide that actually motivated me to go over a couple of things, right? That edge AI, that meta constellation, that these different pieces, Hyperauto, et cetera. But what's really cool as well is you hear some of these other names like, excuse me, Titan is really leveraging a lot of this in and around their military usage, right? Apollo for customer SaaS programs is how they're combining those different sources and understanding the data. Just cool general things that show like we're thinking about different ways to productize what we're doing with customers. I'm going to speak to this for just a minute because I know this industry like the back of my hand, okay? I probably have nightmares, frankly, about it sometimes. One of the biggest challenges that large companies have when they're moving into commercial is it's very easy to talk big picture, 50,000-foot views. What's really difficult is to deliver it to a customer in a skewed format where they can understand and buy something based on what it is in that moment. This is in my opinion, the way they're thinking about becoming more product SKU focused, which means this is big for net revenue retention and, in my opinion, for costs of customer acquisition costs as well, CAC and NRR. This means there's more things that sales reps can potentially sell their customers once they're up and running. Like, hey, you bought the initial Foundry and Apollo access. We've got some SKU-based products or templates or easy-to-market designs. These are the things that I'm looking for that lead to that organic growth internally once you already have that customer signed up. Now, this is the one where part of me can see why Wall Street would have seen this and been like, nope, shouldn't have put this in there. I don't dislike anything I've seen in this presentation, but this slide in particular, the problem with stuff like this is it sets you up to not look good in the short term, even though in the long term, you can feel very confident about where it's going, right? Foundry is to app developers this decade what AWS was to them last decade. That may be true, but the problem with this is the average investor is not working and building on AWS as a developer, nor do they understand why Foundry would be important to those app developers. This is a cool thing. This is a cool thing to throw in there, but the reality is, for some people, this just might miss the mark in terms of like, well, wait, AWS has nothing to do with Foundry. I think the point here is AWS allowed for quick and easy scaling of an elastic-based platform to do data development and scale. Foundry is taking that sort of same mentality, and what it's allowing is to build, integrate, and push AI out in an autonomous format. But I don't think the average person reading that thinks about it the way I just said it. So that's why sometimes the things that look exciting or sound cool or make for good Twitter bites in reality are not always the best thing to share on a call. A couple more slides I'm going to do, then I want to talk to CITI really quick in my plans for the price point. So their big focus, of course, as we know, has been increasing their customer count. Net dollar retention is 131%. That's amazing. I did an entire video the other day on NRR and CAC, and this is exactly why I did it. This means that their customers who are already signed up are increasing the size of their spend with them. That is huge, and that helps with margins. And we see a 71% growth in total customers. Those are phenomenal numbers. I don't think I need to explain anything there. Now, specifically in and around the commercial business, right? 200% increase in customers. Commercial revenue is growing year over year. Actually, look at those numbers, right? From Q1 to 4, 19, 28, 37, and 47%. I feel like I'm playing like, I don't know, Keno or the lottery or something. Just pick a digit in every 10th. Their net dollar retention was 113%, as we discussed. Across commercial in the US, it was 150%, and international was 103%. To think for a second here, their worst case of net dollar retention was still over 100%. You know, hopefully that's a sign that they don't have issues with attrition. It is a sign that they don't currently have attrition or churn issues, but these are numbers I'm paying attention to. Of all the other numbers I see, these are the numbers that matter. Getting customers to sign up is like only half the battle. If they're not the right persona, they're not using it the right way, they're not seeing value, you will not see this kind of net revenue retention, okay? So keep that in mind. Again, commercial momentum, I don't think we need to spend time on this. This is obvious. They're growing fast. They're growing at scale. They've been around for like 2 decades and they're still growing this way. It's a good sign. If we can continue this trajectory, it's going to really increase their ability to scale in commercial as well. Their sales headcount is obviously growing big time. The tenure of those folks working there is growing big time. This means they'll get better at selling and positioning their products. The more of those products that come out, the more they're going to likely be able to sell. This is a big deal just in terms of both having a bigger team to go out and market the products as well as be experts in the product. This is harder than it seems. Trying to hire in the tech space is very, very difficult right now. Again, cohort growth by sizing. I don't want to speak to this at the moment. Obviously, they've made some investments in sales. Again, I'm not super worried about these things. The government business I'm going to talk to just for a moment. Government revenue is not... When you sell to the government, 99% of the time, you're responding to an RFP, an RFQ, or an RFI, right? Request for proposal, quote, or information. There are ways that the government buys. They have set dates. They don't necessarily care about the time of the year or what's good for you as a customer. This is just the way they buy. So I don't put a lot of care into looking at the dates because they don't control when these deals close. An RFP comes out, it says information due by this date, evaluation by this date, purchase by this date. You do not control that. And if you try to control it, you can actually be pushed out of the ability to even bid oftentimes. So I heard a lot of people express a lot of opinions on this. Stop it. You obviously have never actually done an RFP response in AI. You are told when the buy will happen. You do not control that at all. This could just as easily be Q2, 3, 4, and 1 reversed. I wouldn't care at all. All I see here is a net dollar retention of 146%, continuing to grow heavy with a big focus on international government. Phenomenal, right? Nothing negative to say. I'm not even going to waste my energy on it, okay? Same with the cohort growth piece and the U.S. government cohort piece as well. You guys can review all this information yourself. I don't think it's anything here I would add except to say that there's more growth. I don't want to speak to profitability because I think the gap analysis is not a place where I feel like an expert on, but they are working hard towards understanding how to both invest and grow and have that vertex where they meet on profitability and really see that explode. So I'm going to stop sharing my screen for a second. I'm going to take literally 2 more minutes of your time. Today we saw CITI come out that they lowered their price target from about 13 or so to 10. The stock is currently just over 10 right now, maybe 10 and a half. Who cares? Who cares, guys, right? Like, so an analyst lowered their price point. Okay, fine. So let's call it fair value right now. I look at this in a couple different ways. What I did today, because I want to be transparent, I went out and bought a block of equity here, and I immediately started writing calls against it. I'm going to start generating income on my positions, which helps me to even further reduce the cost of those positions as I look at a net spend perspective. And I'm happy to just keep doing that forever. If this thing wants to stick at $10 for the next 10 years, I'll keep adding shares and keep writing calls against it and keep having those covered calls go for me. I'm not scared of the shares getting called. I'll buy more to replace them. But this is the way to think about this. Like, instead of panicking about, let me be clear. If you still love everything about investing here, you still think there's a ton of value for you, okay, say the analyst is right. For right now, because this is how an analyst looks at things, to be clear, it's not over 10 years. This isn't a price target to 2030. This is a near-term price target within the year, right? Let's just say they steadily keep growing, and for whatever reason, we stay at about the same market cap and share price. Okay, great. There's tons of things to do. Keep dollar cost averaging if that works for you. And again, I'm not giving financial advice, but I want to be clear on what I'm doing. I have some call options that are a little bit above this price. They'll expire worthless. That's okay. I'm going to write that off as a loss. And I'm going to literally just keep focusing on acquiring the shares to where I feel comfortable owning it in my portfolio with the right weighting. And then I'm going to literally make income off of my holdings by selling covered calls on this. I am not a huge covered call seller usually, but if we can stay in sort of this trend in and around this $10 price tag for now, whatever. I'm just going to make a boatload of money by selling calls here. That's fine. And if you don't know how to do that, let me know. I'm happy to explain it again as an education perspective. But that's it. I'm going to leave you with a quick one today, quicker than normal anyways. I look at these numbers and I see a company once again reporting tons of growth, revenue retention, targeting the right personas from a customer acquisition perspective, with new products, new use cases that range from everything from how they connect the data autonomously to how they move dang satellites. Listen, analysts look at things for what they are today. That can change at any moment. Kathy Wood runs a fund and gets paid for assets under management. Who knows why she does the things she does? It has to do with the weightings and the way she looks at her portfolio. That shouldn't affect you either. If you are way, way, way hurting here and you've paid prices that are way more than it is today, I get it. I totally get that. But you can dollar cost average. You can start to sell calls. You can try to find ways to bring down that average price point. You don't have to be in fear. Or let's be honest, you can sell those shares and take a loss, wait a month or two, see where things are, and buy back in again after the wash sale is over. So with that, I'm going to wrap up really fast because I've got to jump on a call about AI actually right now. Thanks so much for watching. If I can ever do anything for you or you have questions, please let me know. Thanks so much, everybody. Appreciate the time. See ya.